Steve, good morning. How are you?
Doing all right. How are you?
I'm good. You are live on the Market Open.
I'm not even going to say
it. Good, because I just realized as soon as I said it that you would say your counter to it. But yeah, SMCI having a good day, right?
Yeah, I mean, when Amazon comes out and says they're going to spend $104 billion on CapEx, I mean, it's you got to think it's going to be a good day for a lot of companies today.
What did you think about Jassie's earnings on Amazon?
They're incredible.
Why?
Why? Why were they incredible? I don't know. We can go through them and figure out why they were incredible. It's this could become the most profitable company in the market in 2 years. I mean, when you look at what they produced in Q4 is absolutely incredible. I mean, 188 billion of revenue, big increase. And you look at the net income, they cracked 20 billion for the first time ever in the quarter.
It's pretty incredible. I mean, Google did 25 billion, so the fact that they're up there is just wild.
And Amazon's never really focused on profits. And then you look at cash from operations, almost 46 billion in cash from operations this quarter. I mean, they are going to keep spending on CapEx in data centers. There's so much growth on the horizon for them. And none of these companies are taking their foot off the pedal. And I think that we haven't even begun to see how AI is going to be utilized in enterprise stacks. And Amazon, Microsoft, and Alphabet are clearly going to be the winners.
Do you think the street selling this off right now is because they're spending too much on CapEx and that's like a silly reason?
They're dumb. Okay. I mean, once again, it goes back to these fictitious numbers that I have a problem with. Oh my God, we're worried that Amazon's only guiding for 151 to 155 billion in Q1. Get out of here. I'm so sick and tired of people being like, oh, they're guiding too low. Amazon knows their business better than these analysts. They're telling you what they're going to do. Just be okay with it. I mean, why is guiding for 151 billion on the low end in Q1 bad? They're guiding to do over 50 billion in revenue per month. It's crazy.
Okay, so let's talk about Googs then. I'm putting your article in the chat so everyone who wants to read it, you guys can read this article right here.
Oh, that's so nice of you. Thank you. And I will respond to everybody who puts a comment
on. Google's down another 3% today. Why is the street getting this wrong?
Once again, they're dumb. I'm not going to be nice about it. These are the best companies in the market. They are getting fixated on crazy things. They're getting fixated on, oh, they're not hitting my silly number. They're guiding for something that I'm not agreeing with. Or they're not okay with Alphabet generating 1.9 billion in net income per week. Not per month, per week. They generated over 100 billion in net income. They're now the most profitable company in the market.
Oh, they're more profitable than Apple now.
Yeah, they just became more profitable than Apple by like $3 billion.
Wow.
And they're doing 125 billion in cash from operations or something like that. The street is completely getting this wrong. You look at the valuation metrics that I put in there. They're trading at like 19 times 2025 earnings or something like that. They're trading, I think, 16 times 2027. You're the only company in the Mag 7 trading under 20 times earnings for 2025, I believe.
Why is Google getting discounted compared to the other guys, in your opinion?
I don't know. It's not like they don't have another 30% of growth after this year over the next 2 years in EPS, and that's without including all the buybacks. I mean, you look at that chart I made with what they deploy to CapEx, how much cash from operations they pump out, and then what they do with that from the free cash flow, how much in buybacks they buy. I mean, this is a company that's done over 300 billion in buybacks over the past decade. Like, this is a company that is firing on all cylinders, should be over 3 trillion market cap, and it isn't. It is absolutely insane, and their margins are incredible. And oh no, they didn't get 31% or 32% year-over-year growth, and it's slowing compared to what the Q3 comps were. I'm sorry, 30% year-over-year growth or 30.4% year-over-year growth in cloud. If you're telling me that's not good, you don't understand business and you don't understand Alphabet. Like, I don't know what to tell people, but I hope it keeps going down so I can just buy more at a better price.
So in terms of 2026 forward PEs, Tesla's at 96, Amazon's at 31, Apple's at 28, Microsoft's at 27, Meta's at 24, that's cheap, Nvidia at 22, that's cheap, and Google's at 18, that's the cheapest.
Yeah, it's pretty crazy where we're at right now.
That's pretty incredible that Google's cheaper. I mean, it's also pretty incredible that Nvidia got that cheap as well. But
no, Alphabet's at 16.21 times 2027 earnings. Oh, you said 2026. I'm sorry.
Yeah.
Okay. Yeah, 18.6. Yeah. Then you look at 2027. I mean, there's a lot of growth on the horizon. It's absolutely incredible.
All right.
And you look at the charts that I made about their businesses. Every business that really matters is up and to the right. You look at YouTube ads, you look at subscriptions, you look at search, you look at cloud. And this is a company that's firing all cylinders, and it's crazy that they are getting crushed. It's just crazy. Yet people want to keep buying Palantir and push it to 115.
Well, I was just going to ask about that. So we're at 114.70.
Yeah.
How are you processing what's happening right now? In fact, I might have to ring the bell on the phone with you when we get to 115, just letting you know. But
I mean, this is an overreaction. It is stupid. And the fact that Amazon and Alphabet are selling off after incredible earnings and people want to keep buying Palantir instead of these companies is absolutely insane. And where were all these people last year? Where were all these people with AIP? This is nothing more than people are chasing momentum now, and they don't care about numbers. They don't care about anything except the stock is going up, so we're going to invest. That's all this is. That's all this is. I'm not saying they're wrong because they're trying to make money, and I get that. But this is straight chasing and gambling. That's all this is. And this can keep getting stupider, and this can keep going up, and it can keep getting more overvalued. But there is something seriously wrong when Alphabet and Amazon report and they go down on incredible numbers, yet Palantir, it keeps going up, and they're not even doing $3 billion in revenue. Like, come on. Like, what are we doing at this point? Like, this has become a casino.
You said this last night on the show, and I think this is a good point you made, that if the casino is filled with institutions and not retail, then this could get even crazier.
Yeah, it could go to 200.
It could.
It absolutely could. But at 200, it becomes a 400 billion company. And now you're telling me that a company that doesn't even generate $3 billion at 400 billion market cap, that's bigger than Adobe and Workday and Salesforce is realistic? I mean, come on. At some point, this is a casino, and it's not going to end well. And it can keep getting crazier for a while, but this is not going to end well. I'm happy for everybody that's making money, but people who are investing here, I would love to know why they're investing, because there is no reason to invest right here. And I'm not some bear that's been bearish since $10. And I was one of the first original bulls of Palantir. So when I say that this is a casino, it is much different than a regular bear saying that it's a casino, because I'm not a long-term bear. I think that this company is going to be incredible down the road. But it's gone to companies that are incredible go through pullbacks. This hasn't pulled back, and this hasn't pulled back. Like, this doesn't normally happen.
What do you think the pullback price is if it does happen?
It's going to be hard for this to get under 70, 75 at this point.
Which isn't even, I mean, that's a pullback from these prices, but it's not really a pullback in terms of, Palantir's still up 400% from last year.
Think about it. 6 months is 2 quarters, okay? In 6 months, this is up 335%. What have they added in 6 months? You know what I mean? Like, oh, cool. They went from 2.23 billion in revenue to 2.87 billion. Oh, cool. Cool. Added 500 million in revenue and stocks up this much. Like, get out of here.
We are 3 cents out. There you go, Steve. I'm glad you're with me for this occasion because you're going to have to hear a bell because we just hit 115 on Palantir.
I mean, seriously, you don't think that this is absolutely insane?
Oh, of course.
They're not even doing $3 billion in revenue. I mean, that's the problem. And I get it. You can't find AI in the spreadsheet, blah, blah, blah. And I love Ox. He's been right about more things than most analysts. Okay, very smart guy. But at the same time, things can get overvalued. Great companies can get overvalued. And this is insanity. This is a casino and this is gambling.
I do think there's an argument that Palantir actually cared about their customers and built software that mattered. And in a world in which that is very rare to find because all you have is steak dinners and PowerPoints and bullshit, the street is rewarding Palantir for being
No. That is fine, but the numbers are the numbers, and that has not translated into a company that generates enough.
No, but I'm not talking about
numbers.
I'm not talking about numbers. I can't argue with you on the numbers. The number, you're right. I'm not going to argue on the numbers. I'm not going to do that. No one's arguing with you on the number. No one in the chat is arguing with you about the numbers. It's about the other reasons why people are excited to own this name.
Listen, as an American, I'm super excited, and I want Anduril to go public because the second Anduril goes public, I will buy Anduril and never sell a portion of it because I always want to own it. Like, I've always said that. But once again, from a net income basis, this company didn't even do $500 million of profit in 2024.
Yeah, again,
think about that.
I get every time you bring up Steve, that 80, 60, 70, 90, 100, or 115 don't make sense on that same statement you said. So at this point, what's the difference, right, between 60 and 150? There really is no difference.
Yeah, no, listen, I get it.
Which is why I'm saying it's not about the numbers. It's just not.
I am worried that people are going to get seriously hurt on this because there's no way. This can keep going up. Maybe it hits 150 in 2 weeks, okay? But there's no way it can continue to do this indefinitely.
Steve, I'm telling you, retails. First of all, I asked my chat a couple minutes ago before you called, who's buying? Pretty much everyone said, no, I'm not buying. Right? Like no one in the chat is buying aggressively. And then if you look at Robinhood, if you look at their metrics on Palantir, when you scroll down to the bottom of the app, I'm looking at it right now. Retail has sold literally. I'm just going to show the screen to the chat real quick. It has been 11 days. Look at all that red. Look at all that red. 12 days of pure selling from retail. You're saying you're worried about people getting hurt. I think you should worry about the hedge funds that might get hurt because I don't think it's going to be.
I don't care about hedge funds getting hurt.
Well, it's not retail. I don't know if retail's buying it up as much as we think it is.
And you know what it could be because the market cap's going up. It's becoming a bigger percentage of the S&P and total market funds. It could be ETFs that have to buy right now.
That's also true.
Which is actually not good for retail.
I mean, that's a fair point. That's a fair point as well.
That's not good for any of us that have S&P funds for retirement by any means. And that's another problem. I mean, this is becoming it's definitely top 100 companies now in S&P.
Top 40
now. So more money comes in every 2 weeks. More money's buying Palantir. And at some point, this is going to crack. It's just no company has ever gone up in a straight line and stayed on that trajectory.
See, the thing is, again, I think everyone knows that and everyone's ready for a drop because we all know it's extended. However, I just think it's so funny that, like, if this isn't retail, that's my caveat. If this isn't retail, this is the smartest money in the world that decided they have to come in at 10x the price we bought it at.
This is a better investment than GameStop for retail because this is actually a real company that did real things and this is not a meme stock, okay? This was a real thing that retail got right that other people discounted because they couldn't get through the black box narrative. And you have retail dissecting it and explaining this away. And there were really nobody working for any big firms that were getting on board except for Ives.
Yeah.
So, I mean, I'm happy for everybody. I'm just, this worries me because it makes me feel like the stock market is becoming more of a casino than investing. And that worries me because it's not really just about Palantir. It's about the premise around if people are willing to blindly go into this just because of momentum, what other investments are they making? And what type of due diligence are they doing? Because this is erratic behavior.
Well, we're doing it.
Right.
We're doing it. It's happening, dude. It's been a crazy week, bro. I can't even explain it. This has been, I mean, I get it, because obviously you have a perspective that's valid. Other people have perspective that's valid. Then you got, dude, people are sending me screenshots of them up $500,000. They got a wife and kids. You know, like when you see that shit, you're just like,
yeah, it's life-changing money. I get it. And I'm happy about it. It's just when you put it into perspective and take a step back and really look at what that means, does that mean that people are going to be making more risky investments in the future? And does that mean people are going into this without doing the due diligence? I mean, there's a lot of things that this could mean, and none of it's good.
Well, I think there are things that are good. I think first of all, this is, I think for me, and I think a lot of people in the community, this is our biggest win, right? Our first big, this is definitely my first.
This is going to be the biggest win for a lot of people for a long time.
So that's my point. It's like, if it teaches you how to become a better investor, how to listen to an earnings call, how to, the real take, it teaches you how to hold companies to such a high standard when you've been spoiled as a Palantir shareholder. Now I want some of my companies to do a video earnings call. Like I want them to put on a performance. I want them to actually care about retail. Like there's so many things we learn. And I think that that raises the bar for investors as well. Because when you've been spoiled by Karp, you expect a leader to be as visionary. And if it's not, then you're just not getting my investment dollars, right? It might just keep going into Karp.
Sure.
I mean, people are holding Sundar to a pretty high standard given that call compared to Karp. And you could say that's fair. That's not fair. Obviously, Palantir and Google are different. But the point is, for the people that got Palantir as their first big win, I think the positive effect, even if the stock takes a dip, is that they are learning how, including myself, how to actually value companies, invest in companies, listen to company earnings calls. And that should help us become better investors in the future to hopefully find
the one thing I will say that is good coming out of this is it's getting more people to pay attention to earnings calls and dissect them, which I am happy about because that enhances due diligence.
Yeah, it enhances due diligence. And, people can make a joke about the whole video earnings call, but my point is we feel something when we listen to Palantir on the earnings call. And that means something to shareholders, and especially on a retail investor base. Every single freaking company is trying to figure out how do we get a retail investor base, except the Mag 7, right? Because they don't really need one, even though Elon, has a good one. And even NVIDIA, dude, they're inviting freaking influencers to their GTC event. Like everyone cares about new media because people realize that you can't just appeal to the big boys anymore. You have to appeal to independent creators. And as a result, it puts you to a higher standard. And I think it forces you to care. I mean, like Grab, right? Why am I excited about Grab? The number one reason is because it's a founder CEO. And I've seen what happened in successful investments with Karp and Vlad that are founder CEOs. If Grab had some random suit running the company in Singapore, that's not getting my money. But I learned that a founder CEO can take a company to 100 billion because of Vlad and because of Karp. And I think everyone's learning so much from Palantir as their kind of first win in the market. You don't care about any of this. You just care that they're not.
No.
Yeah. Okay. Well, anyway, NVIDIA is at 130. Looks like.
I'll tell you, I think SMCI is going to be 50 next week at some point.
Do you think you're getting a little too bullish, or
no?
So why don't you double down? Why don't you buy more?
No, there's no reason to.
Dude, at least I have calls. You have shares, right? Or you have calls or shares?
I have both.
Oh, you're playing the options on SM? You're playing financial derivatives?
Well, I did. I have three things. I have shares, I have naked calls, and I have spreads.
Whoa, who is this guy, bro? Where did this guy, what? Steve, the guy who'll barely buy another coin at XRP is doing spreads on SMCI?
Well, listen, I explained this 2 or 3 weeks ago, and I think most people thought I'd lost my mind and I fell on my head or something. But I called it from the beginning that we were going to see increased CapEx across the board. We were going to see big CapEx numbers for 2024 come in during earnings. And it was going to lead to a thesis of NVIDIA not being able to produce enough chips. And if that's true, the companies that are their suppliers for certain things, including SMCI, should see increased levels of revenue generation. And you're playing it on if they're going to get a clean bill of health, which I have to think if BDO is coming in and they're going to stand by this, I think there's at least a 50% chance that these accounting problems are going to go away. And if that happens alone, this could fuel it. I mean, this is a company that was over $100 and it fell because of all this stuff. So if the accounting stuff goes away and then the narrative about them selling more product to NVIDIA, I think this can easily be 50 next week. It could also easily be 15. I mean, if it doesn't go that way on the accounting side.
So the stock market is a casino on Palantir, but you're buying spreads on SMCI.
Yeah, because there's a much different reason about it.
Why is that not a casino, though?
Have you looked at the numbers from SMCI?
No, I'm just saying your short-dated options feel like gambling to me.
No, because they haven't reported in 2 freaking quarters. And when they haven't reported in 2 quarters and you're still going off to June 24 and their revenue growth was over 100% year over year, because they went from 7.1 to 14.9 billion, and their net income almost doubled, going from 640 million to 1.2 billion.
Steve, you can say whatever you want. The point is you're gambling on spreads and options. Like that's
I'm not gambling.
How is that not gambling? That of course is that. If you're wrong, you lose all your money. That's gambling.
I'm taking an educated risk based on 2 quarters that haven't been reported yet, based on what the growth metrics should be, based on what we've seen with the spends from the Mag 7 in the past 2 quarters and what they're saying going forward.
So you're taking an educated risk that's a gamble.
I'm taking an educated risk because this thing is trading at 12 times earnings.
Look, I'm not disagreeing with the numbers. I'm just saying you're saying the stock market's a casino on one stock, but on the other stock, because it's quote unquote undervalued to you.
When people are people are willing to pay 250 times earnings for freaking Palantir. I'm making an educated guess on something that's trading at 12 times earnings right now, has a short interest of over 13%, a small market cap, and all of the data indicates that they've been making money over the past 6 months that hasn't been reported. And they're going to make more money next year because
the fact that you said the fact that you said it hasn't been reported as a public company already tells me this is a gamble. Not saying you're wrong on the numbers.
It's really good or really bad, but
so that's a gamble. That's literally the definition of a gamble. It's either good or bad.
Better right? That this is BDO coming in, and they're going to stand by it.
All right. Well, look, I'm in the trade with you, so I hope it works out.
And remember, this isn't a long-term investment for me. This is a trade.
That makes it even more of a gamble, in my opinion.
No, it's not a gamble. This is a trade based on a lot of due diligence and a lot of information that is indicating that this could be a coiled spring waiting to burst. People chasing Palantir here is crazy.
Well, it is happening. 320.
Yeah, it's gonna be 120 by the end of the day. You watch.
I told you should have wrote that article with the price target. That would have been, again, bro. You would have been goated on Seeking Alpha if you had a $125 price target at 60 and it happened in a month. I mean,
I said it here. That's all that matters.
Yeah, but you said it in a way that wasn't as serious. That's the problem. You said it in a joking way. I didn't even say it. So, I didn't give a price target for 120, but
I did.
You did. You technically did. You technically did.
And what's crazy is why did that just happen?
What happened?
How badly did I just mess up? Fortinet freaking continues to go up. I got called out of it. I should have freaking bought those calls back.
Well, you sold at what, 70 Fortinet?
I'd have to look. I don't remember where I got called out. 75 or 78, something like that.
HIMS is up 10%. So hold on, let's end on this discussion because we were talking about this yesterday. What is your methodology right here for finding the next Palantir? Because you keep asking me what's the next Palantir. I don't have an answer. How are you trying to figure out what's the next?
I'm not. I don't think that this is a stock picker's market right now. I don't think that there is any clear-cut, massively undervalued companies the way there was, or misunderstood companies the way it was. I don't think it's nearly as easy. You could have thrown a dart at companies 2 years ago and had your pick. I mean, there were so many opportunities, from REITs to Palantir. So many opportunities. It doesn't exist right now. I mean, look, I think now you're betting on the next 5 years, and I'm going to say something and people are going to think I'm nuts, but something like Serve Robotics, that's definitely incredibly overvalued here. Something like that has an interesting growth story if certain things fall into place, but it's a lot of what ifs. I mean, maybe LiDAR. I mean, there's some companies I'm looking into. If you think that self-driving is really going to be a thing and robots are really going to be a thing, LiDAR could be interesting, but I really don't know. I think the energy trade play is pretty much done. I mean, I don't know.
So market, guys, is going down a little bit. We've got this headline right here. Don't know if it's accurate yet, but this is the report. President Trump told Republican lawmakers he plans to issue reciprocal tariffs as early as Friday, which is today. So I guess a little bit more of some tariff concerns is what's tanking the S&P right now. It's down 0.5%. It's not really tanking, but you get my point.
Yeah, oh no, the Nasdaq's at 19,600. Oh no.
Also, Goolsby said, I think it will take longer than end 2025 to get to a neutral policy rate. So, yeah. All right, Steve. I mean, it's been a fun week. I will link your article right here in the chat for everyone who wants to read it. Google article for Steve from Seeking Alpha.
I appreciate it because Google is such a screaming play right now. Like it's incredible that this is going down. It's incredible.
No, I agree. And I'm probably going to buy this dip. I mean, this is 18 times 2026 earnings is the cheapest we're going to get. Unless, we get a recession or anything like that. If we avoid that, this is going to be cheap.
I mean, bring up that one chart I made. Bring up the one about the cash from operations and CapEx and really click on it and look at those numbers. This is a company that's doing $62 billion this year and $61 billion last year in buybacks. And every dollar that they pump into CapEx is making the cash from operations explode. And think about this. And the reason I made this chart is because they continuously increase their CapEx spend. It continues to drive cash from operations up. What happens after next year when they put $75 billion into CapEx? Their cash from ops probably goes to 140, 150, and then they go into a maintaining phase. And let's just say their maintaining phase is 40, 45 billion. Their free cash flow is going to explode.
Yeah.
Because cash from ops isn't going to come down.
I agree. 100% agree. I don't disagree at all.
Yeah. I mean, the biggest opportunities right now are the Mag 7, which sounds crazy that they are. Alphabet and Amazon are screaming opportunities right now for long-term investors.
Yeah. All right, Steve. Thank you. We will talk to you later. Appreciate your insights.
Later.
Later.